Hi there, this is Kishore Mohan and welcome to my YouTube channel. So today's category will be on wealth and I'll be talking about the top 3 investment rules given by Peter Lynch, one of the greatest fund managers of all time and also a great investor. So who is Peter Lynch? Peter Lynch is one of the best fund managers the world have ever seen. He took over Fidelity Magellan in 1977 and ran till 1990s. And he almost gave 29% returns per year. One of the greatest fund managers ever the world has ever seen. So let's see his top 3 rules. The first rule: invest in what you know. So basically it says buy what you understand or buy a business what you understand. So if you go to a grocery shop or a supermarket, see what people are buying more. Suppose you're buying some particular let's say Maggie, that is basically Nestle's product. You see many people are buying Maggie or some other product by Nestle. So that means you understand the product, people are buying it, the consumers know it. So buy only what you understand. So that's the first rule. So just when you walk through the road, which company do you see the most? Suppose if you see a Toyota car, you're seeing more number of Toyota cars every day. That means the company is growing well. People know more about that particular car. So buy what you understand, but invest in what you know. That's the first rule. Second, always do proper research. So now you know what to invest in, what to invest. Next needs little more research. So basically, now you fix the company. Next, go to its balance sheet. See the past 5 years. Whether the company is making profits, little research. So whether the company is in profit, how is the management, whether the management is changed like the last 5 to 10 years, is the management very good or the employees happy? You get to these by talking to many people, the news, lot of things. So these things, see these things, whether it's a good profit, whether it's gonna launch new products in coming years. So have a vision for next few years, whether the company will do good or not, whether the sentiment of the company is good, whether people believe in the company is the next research. So there are few ratios and investment formulas, that is the profit making, the PE ratio. See those, look into those research. The final rule: go for the long run. So always invest for the long term. Things might change in tomorrow or day after tomorrow, but on the long run, if you keep investing in regular intervals of time every month, after 10 years, 15 years, 20 years, you'll see a huge profit. That is, you can see the power of compounding. And almost if you're buying a company which gives good dividend amount, for 20 years, the dividend amount given by companies always will make a huge difference. So the power of compounding, the dividends, and the company sentiment, the market sentiment will all come into effect when you go for long run. In the short term, it can go up and down. So that is also a thing, go for the long run. So when should you sell? Big question. Okay, Kishore, you told Peter Lynch said this, go for long run, invest what you know, and do research. All is fine. But when to sell a company? Well, sell when you actually need the money. You have a good profits. After long run, you actually need money sometime. Then sell the stock, or else hold the stock as long as possible until the sentiment of the company changes. If there's a negative sentiment in the company, or some big management change, or it starts to make losses in the long run, that is the time when you have to sell the company, or else hold the company, keep making profits, make the use of the power of compounding. These 3 rules are given by Peter Lynch. So next, let's see the update for Nifty 50 after today's market. Let's see what Nifty's update. Nifty 50. So let's see what's happening in the market. So today, if you have seen today's market, there was a pretty good gap down and the market fell hugely. On Friday, it was trading around 17,400 levels. If you see the cursor here, then it suddenly today, when the market opened, it started falling below 17,000 levels. 17,000 levels stood as a good support in previous weeks, and it was a sentimental support, I would say. So we know, I told in previous videos that foreign investors were going out of the market because due to the interest rates, bond yields, and Ukraine-Russia war, a lot of other issues. So the market was in sort of a bear trend, downtrend. So let's see then suddenly today when the market opened, it fell hugely. LIC and few domestic players were holding the market above 17,000 levels by buying new stocks. But now I think it's gone,
and start falling very drastically down. I'm not sure how much more it will fall. I'm thinking it will fall till 16,400 levels. There's a next support, but we are not sure because of the current market situations. So as of the investor, it's fine. You can keep on investing small amounts consistently on good stocks by following Peter Lynch idea investing rules. As of for traders, I would say not to make any new trades. Hold. If you're good at short selling, you can short sell. But as of buying stocks, do not buy any stocks. Keep the hold. Let's see what happens in the future. If anything drastic changes, I would explain in the next video. Till then, hold. Do not make any new trades. Buy any new companies. For traders. For investors, see the company. If it's undervalued, if it's in good price, keep on buying in small amounts. So that's it. That's it regarding the Nifty 50, guys.
So yeah, now today we saw the top 3 rules given by Peter Lynch, one of the greatest fund manager ever, and also we saw the update on Nifty 50, what's the current situation and what we must do. So that's a wrap, guys. Don't forget to subscribe, hit a like button. Let's see you on the next video. Tata, bye bye, take care.